Hello and welcome to the 4th of July episode of the Weekly Commodity Market Update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Hey, Ben.
Hey, Will, happy 4th of July to you as well.
Well, thank you so much. Are you doing anything exciting, anything fun?
Well, so we kind of had our 4th of July get together this past weekend, but I'll probably run down to Jeff City and watch the fireworks at the Missouri Capitol. That's kind of become my annual tradition. They do a really nice job and a lot of good people down there. So it's a good opportunity to network, and fireworks and music's good too.
Oh, very nice. Yep. Hopefully, wherever viewers and listeners are sitting right now, they have a good view of some fireworks coming up, or maybe they've already seen some. So, good things all around. Talking about some fireworks and maybe adjustments within the commodity market over this past week. Let me give us a quick rundown on where we sit right now. And this is after the close on Monday. September 23, corn is down 96 cents at 4.88. December 23 is down 95 cents at 4.93. August soybeans are up 43 cents at 14.67. November soybeans up 54 cents at 13.77. Soybean oil for August is currently up 5.67 cents at 63.67 cents. Soybean meal for per short ton for August is up $2.20 a short ton at 411.70. The 2023 crop for wheat, that September wheat is down 97 cents at 641. July wheat for 2024 is down 81 cents at 691. And then that September crude oil is up 70 cents a barrel at 70.24. So Ben, tell me a little bit about what really led us into these adjustments as we come into the holiday week.
Yeah, and probably the biggest, adjustment to those prices that seemed rather muted in your rundown just then was the soybean market. That November soybean complex up 54 cents to 13.77. Last Friday, given the big acreage shock with soybean planted acres down 4 million from the intentions report, that sent soybeans noticeably higher, and we've seen about a dollar increase just over the last two trading days. So that made up for the deterioration early last week and kind of offset that, or more than offset that factor to the high side. But certainly that was probably the point as you're doing the rundown of the numbers there. I realized I was like, well, I don't know if that quite paints the picture, but certainly big surprise in the soybean market.
Well, talking about U.S. grain stocks and the report from last week coming out of USDA, we saw really the main three, corn, soybeans, and wheat, come in lower than expected. Really, Ben, explain to me how the market reacted and how you think it might continue to play out for U.S. markets.
Yeah, so let's talk about grain stocks here for just a second. The big surprises were all on the acreage side, but the grain stocks were where the surprise was anticipated. All of them came in on the lower side of expectations. The wheat complex came in below all expectations, and the June 1st grain stocks represents the end of the marketing year for wheat. So that 580 million bushels of ending stocks there for wheat was 18 million bushels lower than where the June WASDE was. So USDA here in July will have to incorporate that higher usage in the wheat balance sheet, likely in that feed and residual category as well. They could go back and adjust 2022-23 production, but I think they'll just add it into the demand side of the equation. Sticking with that grain stocks report just here for a second, the June 1 corn stocks came in 149 million bushels below the average trade guess, within the range of expectations, but certainly on that lower side. That certainly implies strong feed demand for corn through the last quarter. And that's in spite of relatively high prices for a lot of for a lot of cattle feeders. So USDA will have to increase corn feed and residual use here in July. They'll probably offset that with a reduction in corn exports and corn used for ethanol. So I don't anticipate that ending stocks for old crop to change all that much now with the revision higher on the feed side.
Well, it'll be interesting to see how that plays out too, as we see some adjustments in the U.S. export front, up week over week, but still, on the lower end of what we maybe see on a range of expectations. But going back into the acreage report, which is where I sense you'd really like to focus discussion today, talking about the surprises within that. The 4 million acre reduction on U.S. soybean acres. Why did we see such a big reduction in this report? What really led into that?
That's a great question. And I truly don't have a great story to tell on the soybean side. Um, it surprised not only me, but I think everybody in the market, just in terms of how big a reduction we saw in the soybean complex, and the market responded, appropriately. In fact, yeah, it's probably surprising we didn't see it's probably interesting we didn't go higher even yet today. We were up another 20 cents on Monday. So we'll have to see where this goes over the next couple of weeks. But on the corn side, the revision higher on corn, an increase of 2 million acres makes sense to me. In fact, I had to kind of tamper my own expectations for corn acres this spring, because when I was doing my analysis, I came out somewhere around 94 million acres of corn, and was talking with producer audiences across the state about what 94 million acres of corn would look like. I ended up at 92 and a half. But I wish I would have stayed. That was one of those things where I got it wrong, but I wish I would have stayed with my initial estimate of 94. The reason I say you can make a story here is declining fertilizer prices early in the year, plus pretty strong December futures prices for corn, right? We have that relatively high guarantee on the crop insurance for corn. It certainly provides an opportunity for producers, to plant corn. Plus, we had that prolonged planting window this spring in a lot of areas around the Corn Belt that traditionally has favored corn plantings, and that's what we got, right? So I can make a story on the corn side. The hard story to make here is the 4 million acre reduction on the soybean side, and with that, the only thing I'll say here is I'm not going to look back, because I don't have a good story to explain history, and just say that moving forward, this creates a very tight picture for the soybean complex. We're probably looking at prices in the soybean market that's going to have to reach high enough to ration demand. And that's going to keep our markets on the soybeans side tight throughout the fall and probably into the winter. And that's without even a reduction in yield on the soybean side.
Well, and just thinking about how USDA, might come to that number. Obviously, you don't see too many farmers, if they have acres to plant, normally they get planted. So, what kind of conditions might lead USDA to lower that number? I don't want you to speculate maybe what happened, but what's the reasoning behind USDA's adjustment there?
Well, that's just what farmers told them, right?
Yeah.
So this doesn't speculate. It's a survey based on producers, and that's what producers told USDA that they had planted on the soybean side. There's a few acres, and I say a few, a handful of 1 million acres still left to plant of soybeans out there. I anticipate that a good chunk of those acres will get planted, because my guess is that they're double cropped acres following wheat in some cases. So I do anticipate those soybeans to get planted. The other kind of, I think, interesting thing for why this was such a big surprise is I talked to industry folks all spring, seed companies, lenders, crop insurance agents all spring, and no one gave any indication that there was this big a reduction in soybean acres coming. The only, in the last decade plus, so the last 15 years, the only year we've had this big of a surprise on the soybean, or a shock on the soybean side to the downside, was 2019, when we turned a whole bunch of, soybean or corn prevent plant or soybean acres into corn prevent plant, right? Like that was the year that we had the big shock, and we don't have a story like that to tell this year.
Yeah, and it'll definitely be interesting to see how that plays out moving forward, like you said, with some of the double crop acreage there, but certainly not up to that 4 million acre mark. Looking at what else happened last week, derecho conditions impacted a nice stretch through multiple states in the Midwest, but really only covered about 10% of production acreage there. So, Ben, do you see that derecho really negatively impacting crops to the point where it could impact commodity market prices?
Sure, and I think you were, kind of in the ballpark there with about 10 to 12% of the corn impacted by that derecho that hit Northeast Missouri and Western Illinois. Damage was done to several thousand acres of corn. Like, let's not forget that. However, we didn't see the widespread green snap that we saw back in the 2019 derecho. So that corn will gooseneck. It probably won't produce at the same level that it would have, but it might still produce. Some of it was small enough that it'll rebound pretty well. But that storm also brought needed rain for crops that weren't impacted by heavy or high winds. And so the market kind of took it in stride, even though there was all these pictures on social media of downed corn and just terrible looking fields. We got some needed rain in some areas that really needed it. So I would say that it'll take a couple of weeks before we start to figure out the full impact of that storm in terms of losses and where those might be. But as of right now, the market kind of took it in stride.
Yeah, and just going off that, talking about that needed precipitation, as we look out, projects maybe what we might see this coming week. Temperatures are expected to be a little bit lower than normal, but with some above average rainfall through most of the Midwest. So maybe a welcome first week or first to second week in July, potentially.
That's right.
All right, Ben. Well, looking forward to the shortened trading week because of the holiday. What should farmers and ranchers really be paying attention to?
Yeah, so everything's delayed a day this week. The only kind of, I guess, the big things is next Monday, since we do these programs on Tuesday. Next Monday is the U.S. Ag Trade Data dump from ERS. So it gives us a decent picture of what the trade looked like in May.
All right, Ben, it's always a pleasure having you on here. Viewers, listeners, if you'd like to learn more about what we do or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, have a happy 4th of July, and everyone listening, you as well. I'm Will Robinson on Brownfield.